Today we're going to talk about 3 reasons why rent is going to go sky high over the next couple of years. So if you're a renter, stick around because I've got strategies for you. And if you're a landlord, I also have ideas for you as well. So a lot of this information you guys already know, but single family home prices and interest rates are way up. We're going to go into that in a minute in more detail. Single family and multifamily costs are also way up, which are different than prices, of course, and the existing supply is way down. I'm going to show you all 3 of these things and why they're going to get worse. But before I do, let's do not forget about the law of supply and demand. And I think a lot of times people just throw this out the window when this is actually the most important piece. So over here on the y-axis is price, and over here on the x-axis is quantity. And obviously this is demand, D, and supply. The law of demand says at higher prices, which you guys are seeing now, buyers will demand less of an economic good, which is why we're starting to see a little bit of a slowdown in the housing market. The law of supply says that at higher prices, sellers will supply more of an economic good. And these 2 laws, of course, interact to determine the actual market prices and the volume of goods that are traded on a market. Now, this is a complex issue. With respect to real estate, we have prices, we have costs, we have wage growth, we have interest rates, we have all of those things and even more about where people are moving that can make this really complex. So I'm going to try to break it down for you in these next few charts so you can see where we're headed. What I really want to leave you with is that each market has its own supply and it has its own demand. There are people moving in, there are people moving out. There are prices going up and there are prices going down. And of course, we have the interest rates and the cost. So the numbers that I'm going to review are national, but your individual market might be different. The first thing I'm going to start about is literally the cost of money. So it doesn't matter if you're a consumer or you're a buyer or you're a borrower, how expensive money is does affect what you're going to do next. And what I did is I broke this down to January, just 2021, not very long ago, till current May 2022. Now we're in June. And you can see the difference in the interest rates as pointed out by the St. Louis Fed here. You can go online and search for this stuff, but this is a 30-year rate fixed mortgage in the United States as of January of 2021 was 2.65, and as of May 5th, of 2022 is 5.27. So the next thing we're going to look at is how these interest rate increases have impacted the average mortgage payment as we take a look at the average home prices. So stay tuned for that. So going back again to the Federal Reserve's own website, you can see that this is the median sales price of houses sold in the United States by quarter. So this was quarter 2021. The average home price during that time was $369,800. And in quarter 2 of 2022, which is the most recent data, it was $428,700. So now we're just going to take the information that we had in the last 2 slides. We're going to take the $369,800 and we're going to put the 2.65% interest rate in there at a 15% down, and it kicks out a $1,716 payment. So as you can see, from just 14 months later, the home prices went up from $428,700, and the interest rate, of course, went up to 5.27, which now gives you an average mortgage payment with 15% down of $2,521. The difference, of course, is $805 per month or $9,660 a year. Now, I can assure you that wage growth has not kept up with this. So what does this all mean? What this means, guys, is that buying a home has risen significantly more than rent growth. And this is going to push more people into rentals, unfortunately. Even as a landlord, I like to see equilibrium in a market, and this does not bode well for the single-family buyer. So now let's take a look at that data from 2021 to 2022 that we just got and measure it against rent growth during that same period of time. And as you can see, the average American renter pays about $1,326. For a home, it's closer to $2,000 roughly. Here are the top 10 states with the average highest rent, and here are the top 10 states with the average lowest rent. So you can kind of see that Rents are as low as $826 in North Dakota and as high as about $2,400 in Hawaii. So rent can be significantly different across the United States. No different than home prices can be different across the United States. So whether you're a renter or a landlord, you need to take a look at the combination of the home prices in an area and the interest rates and what that does to the mortgage payment as it relates to the actual average rent in that particular area. So in some areas, you're actually going to see that it's cheaper to rent than to buy. And in some areas, it's obviously a lot better to own than to rent. So as you guys are looking to rent or invest, just pay attention to the average home prices and, of course, now with these new higher interest rates and what it's doing to the monthly payment as it relates to the average rent in that particular market. Because even in these markets, we're seeing some rent growth go like this and some rent growth go like that based on net migration. People are either moving in or people are either moving out. The same thing with home prices. It's important that you're constantly looking at the total monthly payment that a homeowner would have versus a renter in your investment decisions. So now we're going to look at construction costs. As you guys can see, year over year, construction costs have gone up by over 19% as reported by the National Association of Home Builders, NAHB.org. Just take a look. So if this 19% on a $400,000 home, what that means is that that $400,000 home is now cost $480,000. That means that if a home was $400,000 to build last year, it's now $480,000 this year. And that cost gets, of course, passed on to the consumer in the form of a higher home price and, of course, a higher mortgage payment, and then, of course, drives more people out of home ownership back into rentals again. Here I found some great data from Gordian. It's a great company on the internet that looks at multifamily construction costs. The average increase is about 1.1 million for a 4 to 6 unit apartment building. Now they have different data in different areas, and you can see Minneapolis, San Francisco, Dallas, and Washington, D.C. are going to be, of course, all a little bit different. These costs must translate into higher rents. Otherwise, these communities might not even get built, which is what's going to further exacerbate the supply issue that we have right now. So the point of these two slides is that if a home is going to cost $480,000 and the interest rates are significantly higher, there's going to be less and less people that can afford them, and it's going to be pushing them more into rentals. Over here, if these apartment communities cannot be built and we cannot add supply, then you're going to see a shortage when there's more demand, and you're going to see more rent growth because these apartment builders cannot continue to build at these higher prices. Both of these scenarios are bad for renters and bad for the economy because renters need affordable price housing. There's all kinds of really good information on the internet, and one of the really good impact studies that Goldman Sachs did late last year was 3 reasons why the housing shortage will last for years. What they point out here is literally just math. These are the demographic trends of people that need housing based on people that are coming of age. The report goes into much more detail if you want to go take a look at it. The point is, we have a demand history and they have a demand projection. Now you have to look at the demand projection based on the historical supply. Of course, demand and supply, which going back to that original chart we were talking about. What we have here is we already have almost 5 million housing units short because of this period right here. During this time, we hardly produced any housing because of the '08 crash. We are now coming out of it, of course, but we're significantly behind, and we have this increased demand coming. So what does this mean? This means we have to build a lot more housing than we have been over here in order to satisfy this demand and the future demand that we already have. And if we don't, we're going to continue to move in what people are now calling a renter nation. This is an article that I did in Jet Set magazine in November of 2021. You can get it online. Here's another article that just came out in the CCIM magazine called Renter Nation. So now let's take a look at the Fed's own information on the home ownership rate in the United States. And of course, this goes back prior to 1970 where we had a pretty low home ownership rate, but all the administrations have always tried to make people buy homes because that's the American dream. And as you can see, we peaked in about 2005, almost at about 69%. This decline is the reason why we've had so much pressure on rent during this period of time. It's because people are falling out of home ownership into rentals. Then, of course, housing prices got pretty good, interest rates got really low, and people started to buy again. And then, of course, we saw the home ownership rate increase once again. So as a real estate investor, this is really important information to follow because during this period of time, the administration was really pro-home ownership, so you want to be on that side of the equation. Being on the multifamily side during this period of time was not necessarily good because people were buying a lot of homes and moving out of rentals. During this period of time, if you own units as a landlord, you have done very, very, very well. What's important about this chart is as you start to see the home ownership rate go up, of course, people are generally moving out of rentals into single-family home ownership. On the other side of it, they're actually moving out of single-family home ownership back into rentals. So depending on which side of the coin you're on, this could be either good or it can be bad. If you're a landlord or a home builder or a renter, it just depends on your perspective. So now let's take a look at this little dip where we are here, which I blew up for you on this lower chart. So this peak is here, which is Q2 of 2020. And as you can see, the home ownership rate was almost at 68%. Not very long ago, just 2 years. And what's happened is it's declining over time. The reason it's declining is because the price of homes were going up during this period of time, as we just showed you, and people were moving more into rentals. So it's my belief that home ownership rates are going to continue to decline because of course, the higher interest rates that we just pointed out, along with the higher price of homes. So if you want more detail on this, just take a look at my other video called Renter Nation that I did a while back that actually goes into a little bit more detail. The point of this whole video is that if you're a landlord or you're a renter, you're going to see your rents continue to go up as a result of the higher price of a monthly mortgage and of course the shortage that I just pointed out. And rents are under pressure because housing affordability is so bad because people have no other choice. Prices are going up to build them, and of course there's a massive shortage. In conclusion, what do I think is going to happen here? I believe that the cost of housing is not going to go down anytime soon. I believe that the Fed is going to continue to raise interest rates to try to curb inflation, so the monthly mortgages are going to continue to grow, which is going to push more people into renters, and it's going to further reduce the home ownership rate in the United States, which is not necessarily good. And this is why I believe we're heading toward a renter nation. So as always, thanks for listening, guys. I appreciate it. Please hit the like, subscribe, and notification bell, and I'm going to continue to do these. And please tell us what you want to see, because I do take your comments seriously, and we do make videos out of your suggestions. See you soon.